Oh, fantastic. Look what's on the telly. Outstanding. Hello, boys and girls. What a great day today it is for a coffee with Scruff. Let's roll the intro. I'll tell you all about it.
Matron, take them away.
And a warm welcome to one and all. And if this is your first time here, I'm the big fella Scruff, with probably an over-obsession with Star Wars, coffee, and tits.
Oh, here we go.
No. So, let me have a little look. But I need me coffee. Oh, I've got me coffee. Got the coffee, boys and girls, because we all know Scruffy likes his coffee. But he likes something else as well.
What else do you like?
I like boobs and tits.
Oh, that's disgusting.
And tits can make money. Shall I show you how they make money?
How?
How? Well, it's easy. First of all, you go, you whip them out. This bit. Then you have to swipe it. And oh, I'm starting with that. And then it gives you money. How good's that? Your tits are madness. But you know what else tits are? Let's go on the whiteboard. And I'll tell you.
How does your missus put up with you? Must be my legendary prowess as a lover.
Bum, 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 bum. Okay, boys and girls. Since Winky's been a good girl and helping me make things expand, that's right, my lightsaber, so that I can cut through the noise and actually tell you something useful. Let me put that away a second. And what is that? I know there's a bit of merriment and I've got a foolish sense of humour, so you have to kind of forgive me for that. And I do have an over-obsession with coffee, you know, because I love a coffee. Why? I work hard. I get up very early and I'm normally there late at night. And this helps me, lubricates the brain. So with that said, where is the theme here? You know, coffee, lightsaber, tits, boobs, whatever you want to call them.
Big tits. Huge tits.
Well, it's all about focus. And if you've got focus, you can put together some form of a plan. Now, the lightsaber was really symbolising that you can cut through the noise. You know, there's so much noise out there, and a lot of it is horrific. You know, and you don't have to spend a fortune to educate yourself. You genuinely don't. You know, I see some all the time, and they charge ludicrous sums. But if you just think about it and lubricate your brain over a cup of coffee, you could actually plan this out yourself. So how do you do a plan? How do you work it out? And how on earth does tits come into this? Well, let me explain it. So let's get Winky's wobblers out the way. Bum. Oh dear. I was murder at school, boys and girls. I was murder at school. So if you're going to put a plan together, it's the first thing you need to kind of figure out. Would it be time? Of course it is. Now time is a broad spectrum. And what I'm going to be doing at this moment in time is kind of tell you what time frames are best for a market and build up some form of a plan for you. So if you are coming to market and you're not really sure what's going on, you need 2 time frames. Ideally 3, but we're going to work on 2 just a second. And the first one is your day chart, the 1D chart. Okay? Why the day? It's really important, guys. It can set out a stall for the day coming forward, but it can also set out a stall for swing trade. Let me explain. If you have a daily candlestick, just like so, okay, what does that represent to you? Now, if you look at it, most people go, candlestick, but it's a daily candlestick. That is a massive amount of data from yesterday. So you can automatically have a top level, another level, a level here, and a level there, and a meridian line running straight through the middle. These are called daddy levels. They are key levels in the market. Why? Because price revisits, and it'll revisit back to one of them, and it'll do it every day, every single day. Very rarely a candle closes, never revisits a level and then moves on. Okay, so that's an incredibly powerful candle to have, because without doing anything you have a roadmap. What else can you do with it? Well, you can put a fib extension onto it. So if you put that across here, fib, and the fib number you're looking for is 127. 127. So you draw a fib from this point to this point in both directions. It'll now give you a hypothetical level either side of that candle. This is 127, by the way. 127. 127. You do it both ways. So now what you've got intraday targets to stay inside. So if the price opens and it's down here and you think you're going long, you can target there as your first TP, target up to the next one as your next TP, and if it breaks the range, you have a target for third TP up to there. If you're swing trading, well, it goes the other way. You're looking for the breakout of the daily candle, and that's your first TP or an entry. And then where would the next one be? Well, up here you'd have a 1618. You would use that. So that daily candle is incredibly important. But I said you need two. Let me explain. So not only have you got a daily as a time frame, you need a time frame you can monitor. Now you can't really intraday with a daily. The daily gives you the framework. But if you are looking at what's called an anchor chart, and it's called an anchor chart because that's where you anchor in, it's where you focus your sort of attention, shall we say. It's an anchor point. It can be 4 hours if you haven't got much time, 15 minutes if you're a scalper, but I think that's a little bit too watered. And everything I tell you about is my own personal perspective. I'm not a financial advisor or anything like that. I'm just a guy who does the job with a proven history. The next candle you want to be looking at, and it's next to it, is the 1H, the 1 hour candle. Why 1 hour? Because during the day, it'll essentially give you decent setups at the top of each hour, which helps you manage your time, because we are planning this out. And you can look at 9 o'clock. Is the charts ready? Yes or no? No. Fine. I wait to the next hour. Are the charts ready? Yes or no? No. Wait to the next hour. Calms you down, adds discipline. Okay? But it's also fast enough that you can trade it. So if it is ready, who's to say that you can't just make an entry point on the break of that hour in your given direction, moving to a daily breaking point? Now that can be the prior open, close, meridian, or high or low of the day. If it's broken the high or low of the day, you can then target into a 127. And how else do you put that together? Well, you just use something like an ATR to see how far it'll stretch. But it can help you. Now, if you were going for 3, I would choose this one. 15 min. Okay? And how would you do this? Well, we'll get onto that in just a second. But they're the 3 frames you would use. Overview, anchor, entry. Simple. Okay? So your daily is giving you an overview of levels. Your anchor chart is giving you the feel as to whether it's right or wrong to move into the market at this given time. And then you use a 15-minute to enter the market and fine-tune your price. Right? That's simple. So, time. But we've got more things to think about. What else? Well, what about an indicator? You know, I and D. Indicators. Can they help you? Because obviously you need direction. You need timing. Back to the first part. course they can. Which indicator should you use? Well, that's the million-dollar question, isn't it? Because none of them are perfect. Not one. What they are is exactly what they say they are. They are an indication of what may happen, not a definitive. So if you're ever flicking around sort of social medias and getting yourself onto Instagram, or what I call the land of make-believe, and they say they've got the perfect system. No, they haven't. The perfect system applies to one thing. There's only one indicator that is perfect, and it's not even on the charts. It's common sense.
No way!
But if you are going to use an indicator, don't rely on one. Why? Because as I said, it's an indication. It isn't perfect. So you need it to be complemented with something else. I use 3 personally, and I'll tell you what 3 those are. You know, but let's have a look. So the first one I would use, I use a Bollinger Band, the BB. Why? Because it looks like boobs. Boobs.
Oh, make it stop.
No, actually I use it because it is fantastic at showing the shape of market. And not only does it show the shape of market, because it can show compressions, expansions, etc. It actually shows the strength of market. And it's based on the arms. If they are close together, the market's in a compression and a range, and you can trade top to bottom. If they are flaring out, the market is now moving into trend. So you can then again apply the second indicator to what you're seeing on a Bollinger Band. So if it's compressed, you need an oscillator, something that is bounded between 0 and 100. There are loads, you know, stochastic. I don't use stochastic so much myself, but the one I use is an RSI. So you have your RSI. Now there are 3 settings on an RSI. You've got the ultra slow 28, standard setting 14, and momentum setting 5. What do they do for you? Well, it depends on the type of person you are. If you want to see a build up of strength coming in, you use the 28. If you're just happy with standard settings, use a 14. But if you want to see what the momentum is in the moment, use a 5. So how does this work? Well, if you see that in a range, and you've got a 5 setting on it, every time it's at the bottom of the range and that RSI is low, you can then look at your 15-minute chart, buy it till it gets back to the top of the RSI, and then repeat for it to come back the opposite way. But what if it's in a trend? That's a waste of time. You'll get lacerated. So you need something else. And the indicator I use for that is a MACD. Moving Average Convergence Divergence. What does that mean? It's a big word, isn't it? Lots of mouth. And there's a story about how that was sold to bankers. They were just going to call it the moving average indicator, and they said, no, if we make it a fancy name, people will think it's all mystical and everything, and they'll buy it. And that was the story it was sold when it was created. But it is actually quite clever. What it's on about is, it is moving average based, but it's also based on the space between moving averages, and that can help determine the strength. It's why you've got kind of an set of bars behind it, you know, and you can kind of see how that oscillation is, and then you've got the moving averages running through it, creating the MACD and the signal line. Now once you can see that, and you're looking at, say, the histogram only, well, you're looking to see it go through the single cross, and you can see it come through. But if you have the signal line and the MACD, you want one pushing the other, and it becomes incredibly powerful. Well, if it's going up and they are like this, and the Bollinger Band is flaring out, well, the pair of them are telling you it's in a trend. Go back to 15 minute, find a decent entry on a level, and then hold it to the next level. Simple stuff. So you've got time and you've got indicators. But what else do you need? Because is that enough? Well, of course it's not. You need to be able to target. Okay? Put a little bullseye there. Oh, that looks like a boob as well, doesn't it?
You dirty old man.
Oh, it's getting good, this. Getting a bit hot under the collar. Just a second, I'm going to have a moment. That was a good moment. But yeah, target. So, how do you target? A couple of ways you can target. I've just told you how to put some levels in on a watered version. You can target the next level. What if that next level is miles away? Say it's breaking the top of the daily range and the candle is already dipped down into the prior day. That might be a step too far. You know, that means you've got to hold it overnight. But then that comes into swaps. And if you haven't worked out what your swaps are, a swap is where you are charged to hold your trade overnight. Now you can have positive swaps where they'll pay you. And you can find that out by going to the MT5, look at symbols, and then look under the data that's on it, and it'll tell you whether it's positive or negative. There's a couple of videos on it on the MT5 on the channel. If it's positive, fine, hold it over. But if it's negative, you've got to work out whether the cost you're going to get charged is worth eating into the possible profit. But also you've got your mindset. What if you can't deal with going to bed with an open trade? A lot of people can't. And they hide underneath the covers. And they're sort of like this. Get the lightsaber out so they can have a bit of light. And yes, Milky, I'm talking to you. And thank you very much. I'm going to give him a little. He sent me that. Princess Leia. How good is that, eh? Princess Leia. Fantastic.
Hello.
I was really appreciated. But yeah, but what if you are nervous Nelly? You need to be able to target appropriately. So how can you do that? There are a number of ways to do it. And one of the easiest ways is set a minimum target for each trade. I stress minimum. Because if you put maximum targets in, it doesn't get there, you're deflated. If you have a minimum, anything above it, fantastic. But you've already set your stall up. So you want a minimum target. And how can you work that out without even looking at the market? You use something called an ATR. Average True Range. And the easiest way to do this is, because you can look at a 15 minute and say, oh, every 15 minutes it moves 5 pips. But what if you're going to hold it for 3 hours? Then you've got to sit and try and work it all out and floozy woozy and all this sort of stuff. Simple way. Back to the day chart, D1. Divide it by 3, gives you a number. Divide that by 3, gives you a number. I'll give you a good example. Euro dollar, ED, has an ATR of roughly 90. Divide that by 3, gives you 30. Divide your 30 by 3, gives you 10. Now you can go to the charts right now, look at euro dollar, and I bet you can find in each of the waves on an hourly chart 10 pips that fits inside each wave. And when you're looking at the waves, you're working on a power of 3, a third, because whenever you go to market, and I'd show you a wave, so the market pushes up, pushes down, pushes up, pushes down, pushes up. You're looking to buy into this. The first third and the top third, you're probably not going to get hold of. So you're using that as your in and that as your out. And the bit in the middle is your profit, as long as it fits a minimum of 10 pips. Simple stuff. Okay. So now you've got time, indicator, target. You've got a TIT, which is a plan. But now you need tits, as in two big bouncy tits. Your ST can be a strategy. So that's strategy. Simple. So let me show you one. Simple one. It's dead easy. So get rid of all of this.
Well, we're waiting.
Okay. Simple setup. You have a level that you are waiting for the price to come into. So the level is key. You need to learn how to draw levels. Level. You need to pick a direction. Well, where am I going to get direction from? I haven't got a clue. Of course you do. You've already been looking at a 1D. You're already looking at a 1 hour. Overview, anchor, need to be in the same direction. How can I do it? Well, I've just told you about a MACD. MACD is a moving average, shows the average price and its movement. That and that need to be in the same direction as a MACD. Also told you needed to figure out whether the market is trending or bouncing. How do you do that? Bollinger Band. The Bollinger Band will show you whether the market is flaring out or not. Now this could just be a pullback from a bigger range. So if that MACD is pushing up and your Bollinger Band is flaring out, that becomes a buy for a continuation. So that move up, down and then back up gives you a way to get in. And how do you monitor it? 15-minute candle. Very simple. The 15-minute candle comes, tags said level, and then you look for the next 15-minute candle to break the move. You put an entry point above that candle and then you wait for the next one to take you in. It's a 3-candle situation based on a given direction, based on 2 time frames, and it's as simple a strategy as you get. Very easy. I'll give you another one. You've got the price moving backwards and forwards like so. You can see it clearly on the 1 hour. 1 hour. Bollinger Band is just following it. Maybe it's out a little bit. Like so. So you can recognize a range. You have an RSI underneath it, set to 5. Every time it's at the bottom, and that's at the bottom, and they align, you buy. And you buy it till it gets to the top. Simple. So there's an oscillating strategy based with the Bollinger Band and an RSI. Here's another one. Moving average. 50. Another moving average. 200. What's that symbolize? That symbolizes a trend. Where do you find it? Find it on a daily chart. Why daily chart? Because what we're going to look for is what's called a golden cross. So we'll get them out the way. You have your 200 moving up, and then you're watching the 50 here at that crossing point. That's what's called a golden cross. You'll hear it recognized over and over. You buy there and you hold this till it comes back through, called a death cross. That'll help you hold. Does it work on an hourly chart? No. Doesn't even get close to it. Any moving average crossover system below a day or a 4 hour is lethal. But it's a perfect swing trade. You're not going to win them all. You're going to go into drawdown on quite a lot of them. But when they win big. So that means you've got to sort of offset what's going on and about becoming what kind of trader you are. And then What else have we got? What else have we got? You can use what's called no man's land. No man's land is a very simple strategy again. Again, you have a 200 and you have a 100. They run like this together. In here is no man's land. You do nothing. There's nothing you can do when it's in there. But what you're looking for is a 5 period moving average, and it comes along and it crosses in. Now you're sort of looking at it and you're thinking, this could be good. This could be a good trade. How do I trade this? Well, if you're ultra conservative, you can get in. The problem is, as we know, there is whipsaw. So you wait for the 5 to get through the minefield, no man's land, and come out on the other side. And then you buy it. Why is that? Because you are going with the trend and the price is following up. So you buy here and then you hold it. And then when it comes back into no man's land, you get out. And you can do the same thing going the other way. Is it a good strategy? Not really. But if you are systematic and you just want something that is simple, that's about as simple as it gets. But there's even a simpler one. And it is 100 times better than what that is. Let me show you. One candle setup. Based on your anchor. Now if you're an hourly candle trader, it's 1 hour. And you do it on the opening range of your session. So if it's Asian, it's like 12 till 1 or 11 till 12, depending on which session you're looking at. You can do 7 AM till 8 AM for Euro. You can do 8 AM to 9 AM for GB. You can do 1:30 to 2:30 for the US session, or 2:30 to 3:30. Depends on your time frames. But it is one candle. You have a range given. And what you're looking for is the next candle to break it. And that next candle wants to be 15 minutes. 15 min. You don't even need a direction. Helps if you have a direction and you know how to get one. Because if you know how to get a direction, you can add a few extra percentage points. But if you're going to do this raw, that's it. It's the hour opening range. Wait for the first break and you put your order here or above. Depends on which way you want to go. If you've got enough room to do saddle, you put one on each and you take the first trigger. Stop under there. Alright? So it has to come all the way down to here to stop you out. And your target is 1 times range. Minimum. That's it. That's about as simple a system as you get. You don't need a direction, it's raw. Opening range, breaks the range, hold it into sort of the same size. So if that range is 15 pips, you hold it for 15 pips and then you have a choice. You either pull it to risk free or you take your money. Very simple. Now that, when you put it all together with a plan, time, indicator, target, strategy, you get a lovely pair of tits.
I'd buy that for $1.
Isn't trading fun? Now why do I clown around like this? Very simple. Trading is a job. It is not a joke. But if you look at it as a joke, that's what it becomes. But if you plan it with a good sense of humour, it can turn into a very, very good job. So if you're stuck, I'm very easy found. You find all my contact details below. And as always guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.